Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. Hopefully everybody had an amazing 4th of July holiday, having that one day off in the market trade. How much of an effect was that on what we saw in the markets? We saw interesting things happen within the cattle complex. We know that the soft red wheat has had an interesting trade as well on a Friday. Some talking about because there's some concerns with wheat in France. We'll also talk about jobs numbers, the feds, and a whole lot more. So stick around. It's going to be a great show coming up after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again as we continue our conversation about what happened in the markets this last week with, of course, a holiday thrown into it. We have Darin Fessler joining us with Lakefront Futures and Kyle Bumsted as well with Allendale. And gentlemen, I wanted to kind of start out. Give me your one nugget, the thing that kind of caught your attention this week on the markets. Darin, we'll start out with you.
Strong price action in soy oil. I've been looking for an unwind between what the managed money has been short in soy oil and their length in soy meal. I think maybe that got the beans a little bit off the ground here later on in the week. But good to see that little unwind here because the bean market has been overdone here to the downside.
All right, Kyle, for you.
I'm going to say somewhat disappointing action here in the corn spreads. I would have liked to see the Dees July corn spread close maybe just a little bit weaker there. It closed at 31.5, so it's building some more carry in there, saying to me that the commercials are getting less concerned about the size of crop we have. Even though we've got problems, with flooding and whatnot, we don't know how many acres are actually out there and what's actually been affected. Also, this cattle complex, the feeder cattle complex here towards the end of the day here on Friday kind of gave it up. That's a little bit concerning too. I know a lot of the folks talk about how the corn goes down, feeders should go up, but we saw the exact opposite thing happen here. They worked in tandem here the last few sessions here when corn's been going down, feeders been going down, and like we saw in that USDA report, corn was down hard that day and feeders were down hard that day too.
All right. Well, we're going to do a breakdown of these markets. Obviously, throwing a holiday into the middle of a trade week for us on a Thursday, I think, made things a little interesting. Folks said, well, at least before this report, Friday's going to be quiet. There's not going to be a lot to happen. But when you look at those numbers, especially from a grain perspective, Darin, it was anything but kind of a quiet trade day.
Yeah, I mean, I think we go back to. I think Kyle made a really good point there. Is we really don't know, when the spreads and the commercials feeling kind of comfortable, in my opinion as well, that there's probably not going to be a huge supply concern. I mean, yes, we've seen some pushes around the country in basis, but the question I've asked myself multiple times is either the producers have been really wrong on this side of thing, if you will, or they're more flush with cash, or more have a better, strong balance sheet than I'm aware of right now. Because some's really not adding up with the supply side of things in some of these bases. Maybe it is hand to mouth with some of these guys, but again, the spread action is not indicative of what the basis is saying. So I am a little bit concerned. Yet if we continue to get rains here, the perception, if you take the 80% of Iowa looks good. Illinois looks good. Nebraska, we've been talking. It's right now. It's record good in Nebraska. It's probably going to be that way until the combines roll. If there's a bigger issue out there, the combines will say that. But right now, it's just a perception about what the weather is and where these stocks are.
Well, you talk weather, and I know, Kyle, you and I have had the conversation about you guys getting some rain and having, literally chest-deep pastures. But when you look at the big picture of areas of South Dakota, Nebraska, Iowa, Minnesota into Wisconsin that have had water issues, at what point do you think the market's going to say, okay, there might be an issue, we're going to have to wait and see what happens?
That's a good question, Susan. I had a lot of folks right away tell me that this is going to be comparable to the flood of 1993. Well, at that point in time, I do remember the flood of 93. However, when you go back and look at the charts, they really didn't realize we had an issue with the 93 crop until you got to about the fall of 94. So it could take a full year yet to realize if there's that big of an issue out there. And we worked through the stockpile that if this year's crop really is short because of these floods and some of these weather issues that we have, granted, we still got a lot of summertime left. Temperatures have been cool. We could heat this thing up during pollination, still have some issues. But right now, as far as the Western Corn Belt goes, we could use some heat out here to kind of move us along a little bit. We've got plenty of moisture, and the crop looks excellent out here in this part of the world. Anytime you're not irrigating on the 4th of July here in Central, not always, but the odds are in your favor for a decent-sized corn crop.
You bring that up, and yes, on the 4th of July, of course, I was with a bunch of our guys on the fire department that I'm a part of, and of course, big chunk of them are farmers, and every one of them said the same thing. God, I don't remember the last time I didn't have a pivot running the 4th of July.
How's the sweet corn crop looking? If it's looking good now, it's probably going to be pretty good in that field corn too. So
I'm going to throw this out to both of you, because with your variety of customers, is there a lot of grain still sitting in the bin? Because that too was a conversation I heard a lot on the 4th of July. Darin, what are you hearing?
Yeah, I mean, I have 300 clients or over that all across the country, and it wouldn't be too hard for me to grab. I know who has the bushels. The bigger concern is, are they willing to sell those bushels? And that's where I think Basis has a lot of heavy lifting to do. Now, granted, I'm a little bit set back by, is there really 71% more corn year over year in Illinois, or Iowa's seen some big numbers. Nebraska seems like the more realistic number, 8-9% higher, but it just seems like there's a lot of corn in Illinois year over year. So I'm just a little bit, that number seems a little high to me.
What about you, Kyle?
That's a good question. Since I primarily work with the end user side of things here, and yes, there's been a lot of people saying, wow, look at the rail cargoes going west. We're always railing corn west this time of year to the feed yards because we are running low on corn. And that tells me that we have placed a lot of cattle, and we fed a lot of cattle, and we fed a lot of big cattle, and they're going through the corn. But this is not unusual activity to see trains going west down into feed yard country from central Iowa, central Illinois. I know a lot of folks make a big deal out of it, but I mean, there's feed yards out there that are running low on corn. They need a little bit of corn to stretch. And as far as on the producer side of things, if we were active and aggressive on marketing, we don't have a lot of corn left. There are some out here that do have some corn left, just to make sure, because they're always going to keep a handful of bushels around. If they're a farmer feeder or something like that, they're always got to keep a little old corn around just to make sure we have enough to get through there. And you could see what I like to call a second harvest or a tin can harvest develop here once we get further into this crop growing season, maybe the middle of August, and finally realize that, yeah, if we've got a decent sized crop coming on, those bins are going to have to get swept out to make room for new. So it is still in the back of my mind. There is some corn out here that has to be moved yet.
I want to talk about the new highs, Darin, that were placed in the soft red wheat on a Friday trade. Some say it kind of goes back to what's going on with France and cutting some of their wheat numbers. What's your takeaway?
Yeah, I mean, France is at the early stages of their harvest, and they downgraded their crop again. I mean, 58% good to excellent. So it's the French wheat crop I don't think it's going to move the needle per se. It's a good barometer for our markets here. But the big kahuna in the room is, what is that Russian number? If Russia is, as some would suggest, mid 80s or maybe 83 million metric tons, is it enough to move our markets outside of an oversold or overbought condition? That's the concern that I would have for our markets here, especially the HR. It seems like this crop here is going to be pretty good. The spring wheat is even better. So, I mean, at this very time, our markets right here are going to produce a pretty good crop.
Kyle, you talked about a about face kind of happening in this cattle complex on a Friday trade. Let's kind of break down what you're seeing in the markets, because again, they didn't really follow what happened on the grain side of trade.
Correct. We did see feeders up there, especially that August contract. A lot of folks are really watching that for these summertime sales, these big video sales and whatnot. We did see that run up there to that north of 263.5 area, where 264 has kind of been the upper end of the range we've recently seen here. And we kind of failed up there again. Today's high of 263.75 and set back almost $2 down to that 261.47. Made new lows in the actual post market today. And I'm just looking at the volume here. It was decent volume. It was a thin volume trade here as far as feeders or live cattle. So I'm a little bit disappointed in the action. However, on the live cattle side of things here, If we could start to see some more cash trade here at some of the numbers I've heard, it might support us a little bit here on Monday. We're trading quite a bit of cattle at 190 in the Southern Plains. We traded 312, some light. I haven't gotten a confirmation yet, maybe 315 on a dress basis here on certain cattle going to a regional packer in eastern Nebraska. So that's not bearish. The only question that a lot of folks in the trade have is when and if this box beef market, the shoe drops and we start to see this box beef market roll over and turn south. That's when you could see the packers start to try to strong arm this thing lower.
Can the cash keep the momentum going into next week?
That's a good question. I think it can if we see firmer cash here this afternoon. We are going for a full kill week here next week, and there are some majors that are going to be picking up that lost production we saw from that Kansas issue earlier this week from that roof collapse or whatever. So we are going to be running a full schedule on some of these plants tomorrow to try to make up for that. So I do think there's a possibility we trade steady. We could be in for steady money here, maybe a little bit higher next week. Again, on that box beef, it's kind of dependent there. If that thing really rolls over and starts coming off in chunks, then it's going to change the perception here. And we also got to keep in mind, too, we've got some fun length out here in this live cattle complex. They don't have near the length in feeders, but they do have some length in the live cattle, and they could peel some of that off, too, if they start to get spooked.
Darin, what about the jobs numbers that came out on a Friday?
Yeah, the headline number was, you view it as a positive until you actually dig into the data and see revised numbers for April and May. So again, I think it's revisions that we've seen multiple times that come out here. They're trying to sugarcoat the jobs data and the economy numbers here. I think that's a huge concern, potential huge concern for the perception of cattle as well, given some of the fund length in some of those markets.
Do we see any consumer change in the confidence and with all this data that's coming at us?
I certainly think you definitely could. I mean, you're already starting to see unaffordable housing prices in a bulk of the country. You're already seeing rising credit card delinquencies. So these are all things that are starting to pile up, I think. And especially if you just go out and gander across any type of car dealerships, the cars are starting to pile up again. Consumers are pulling back. And I think that's a huge concern as well. The Argentina government also said they're pulling back. They're seeing consumers pull back for cheaper meat, pork, chicken, all that type of stuff as well. So I could see that coming to the U.S. sooner or later.
Kyle, I see you shaking your head with agreement. We'll let you put the last word in before we wrap up today.
Well, to add on to what Darin said, digging into those numbers, they added 70,000 on the government sector too. So I don't know where we needed to add 70,000 more jobs in the government. If anything, then it's just an opinion. We probably could have cut 70,000 jobs and saved the taxpayers some money. But yeah, it's definitely something that's a concern. The credit card debt keeps rising. And we are still seeing people out there, obviously, traveling here. It wasn't an issue because this is one of the heaviest traveled 4th of July weekends we've had or ever had historically, is what I read. So it hasn't, the ball hasn't dropped just yet. Maybe they're still running on a lot of credit out there, which it looks like that's what they're doing.
Well, gentlemen, I appreciate your time. We unfortunately are out of time for this week's episode. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.